वेलकम टू वीलर्न। वीलर्न में आपका स्वागत है। टुडे सब्जेक्ट हायर परचेज एंड लीज फाइनेंसिंग, सेशन नंबर 6, स्पेशल अकाउंटिंग प्रॉब्लम्स। और टॉपिक कवर्ड इन दिस सेशन: रेजिडुअल वैल्यूज, सेल्स टाइप लीज, लेजर पॉइंट ऑफ व्यू, बार्गेन परचेज ऑप्शंस, initial direct cost, current versus non-current classification, and different kind of disclosures. Special accounting problems, residual values. देखिए, जब भी लीज फाइनेंसिंग की बात होती है तो लीज फाइनेंसिंग में क्या होता है कि जब लीज एक्सपायर हो जाती है, लीज खत्म हो जाती है, तो उसके बाद वो एसेट्स जो है लेजर को वापस भेजना पड़ता है लेजी के द्वारा। तो उसमें ये वैल्यू हम कैलकुलेट करते हैं, रेजिडुअल वैल्यू कितनी होती है, यानी जो वापस हम करते हैं उसकी कॉस्ट कितनी होगी, ये आपकी रेजिडुअल वैल्यू कहलाती है। और इसको मीनिंग के थ्रू अगर हम डिफाइन करना चाहें तो एस्टिमेटेड फेयर वैल्यू ऑफ द लीज्ड एसेट्स एट द एंड ऑफ द लीज टर्म्स, कि लीज के टर्म के एंड में जो उसकी वैल्यू बचती है उसको हम रेजिडुअल वैल्यू कहते हैं। नेक्स्ट इज गारंटीड रेजिडुअल वैल्यू। ये एक अलग से कंसेप्ट होता है लीज फाइनेंसिंग का, जिसमें लेजी एग्रीज टू मेक अप एनी डेफिशिएंसी बिलो ए स्टेटेड अमाउंट दैट द लेजर रियलाइजेज इन रेजिडुअल वैल्यू एट द एंड ऑफ द लीज टर्म्स। इसके अंदर क्या होता है कि पहले से वैल्यू डिफाइन कर दी जाती है। जैसे सपोज आप जो है 5 साल की लीज आपने दी है और 5 लाख रुपए की टोटल एसेट्स की वैल्यू थी, और ये पहले ही डिसाइड कर लिया गया था कि जब एसेट्स वापस होगा 5 साल बाद तो उसकी वैल्यू 50,000 होनी चाहिए। अगर 50,000 से कम में वो रीसेल होता है तो जितने अमाउंट कम में रीसेल होता है उतना अमाउंट लेजी को कैश में पे करना पड़ता है। तो ऐसी सिचुएशंस को, ऐसी स्थिति को हम गारंटीड रेजिडुअल वैल्यू कंसेप्ट कहते हैं। स्पेशल अकाउंटिंग प्रॉब्लम्स रेजिडुअल वैल्यू के रिगार्डिंग: लीज पेमेंट्स, लेजर में एडजस्ट लीज पेमेंट बिकॉज ऑफ द इंक्रीज्ड सर्टेनिटी ऑफ रिकवरी ऑफ ए गारंटीड रेजिडुअल वैल्यू। लेजी अकाउंटिंग फॉर रेजिडुअल वैल्यू: लेजी क्या करता है, द मिनिमम लीज पेमेंट्स इंक्लूड द गारंटीड रेजिडुअल वैल्यू बट एक्सक्लूड्स द अनगारंटीड रेजिडुअल वैल्यू। जैसा मैंने आपको बताया कि जो अनगारंटीड वैल्यू है, जैसे सपोज 50,000 का एसेट्स हमने गारंटीड किया लेकिन रियलाइज हुआ वो 40,000 का, जो 10,000 का डिफरेंस था वो उसे पे करना है, ना कि पूरे 50,000। स्पेशल अकाउंटिंग प्रॉब्लम्स एग्जांपल: कैटरपिलर फाइनेंशियल सर्विस कॉर्पोरेशन, अ सब्सिडियरी ऑफ कैटरपिलर एंड स्टार्लिंग कंस्ट्रक्शन कॉर्पोरेशन, signed a lease agreement dated January 1st, 2012 that calls for Caterpillars to lease a front-end loader to Starlink beginning January 1st, 2012. The terms and provisions of the lease agreement and other pertinent data are as follows. The terms of the lease is 5 years. The lease agreement is non-cancelable, requiring equal rental payment at the beginning of each year. Second position, the loader has a fair value at the inception of the lease of rupees 1 lakh. An estimated economic life of the 5 years of the lease, and estimated residual value of rupees 5,000 at the end of the lease or after 5 years. Now illustration: guaranteed residual value, lazy accounting. Starlink pays all the executory costs directly to third parties except for the property tax of rupees 2,000 per year, which is included as a part of its annual payment to Caterpillar. The lease contains no renewal options. The loader reverts to Caterpillar at the termination of the lease. Starlink incremental borrowing rate is 11% per year. Starlink depreciates on a straight line basis. Caterpillar sets the annual rental to earn a rate of return on its investment of 10% per year. Starlink knows this fact. Now solution: Date 1/1/2012, lease payment plus GRB 25,237.09 every year. Executory cost 2,000. Interest at 10% on liability for first year 0. Reduction of lease liability 23,237.09, that means 25,237.09 minus 2,000. Lease liability at the beginning of the year 1 lakh and after or at the end of the year 76,762.91. Same as for next year 25,237.09, interest 2,000, interest liability 7,676.29, reduction of lease liability 15,560.80 and balance 61,202.11. तो इस तरह से ईच एंड एवरी ईयर हम उसको माइनस करते चले जाते हैं और एंड में जाकर के इसका बैलेंस 0 हो जाता है. आप देख रहे हैं कि एट द एंड ऑफ 5th ईयर 5,000 का लीज हमने लिया और उसकी वैल्यू जो है वो 4,545.24 होती है, जो कि हमने उसकी प्रेजेंट वैल्यू कैलकुलेट की है. स्पेशल अकाउंटिंग प्रॉब्लम्स वंस अगेन. At the end of the lease terms, before the lease transfers the assets to Caterpillar, the lease assets and liability account have the following balance. Leased equipment under capital assets 1 lakh, interest payable 454.76, lease liability 4545.20, total payment 5,000, less accumulated depreciation or capital assets 95,000. अगर दोनों को हम मिला देते हैं 5,000 प्लस 95,000 विच इज इक्वल टू टोटल रुपीज 1 lakh. Special accounting problems. Another, assume that Sterling depreciated the leased assets down to its residual value of rupees 5,000, but that the fair market value of the residual value at December 31st 2016 was rupees 3,000. Sterling would make the following journal entries. Loss on capital lease by rupees 2,000 to interest expense or interest payable account 454.76 and lease liability 4,545.24. It is a next entry, accumulated depreciation account debit 95,000 to lease account 1 lakh, to cash 2,000. And now another problem, assume the same fact as those above except that rupees 5,000 residual value is unguaranteed instead of guaranteed. Caterpillar would compute the amount of lease payment as follows. Sterling capitalized amount 10% rate annuity due basis including under guaranteed residual value, present value of 5 annual rental payment of 23,237.09 multiply 4.16986 which is the 5 years annuity, calculated or from the table, then 96,895.40, unguaranteed residual value rupees 5,000, not capitalized by lease 0, so leases capitalized amount 96,895.40. Another special example, computation of lease amortization schedules. Illustration, Sterling construction same as previous examples, and at the end of the lease term before Sterling transfer the asset to Caterpillar, the assets and liability account have the following balances. Leased equipment under capital lease is 96,895, less accumulated depreciation on capital assets 96,895 and balance is 0. Ledger accounting for residual value. The ledger work on assumptions that it will realize the residual value at the end of the lease term, whether guaranteed or unguaranteed. Illustration, assume a direct financial lease with the residual value either guaranteed or unguaranteed of rupees 5,000. or $5,000. Caterpillar determined the payment as follows. Fair value of leased equipment $1 lakh less present value of residual value $5,000 multiply 0.62092, which is the present value factors, equal to 3,104.60. Amount to be recovered by lessor through lease payment 96,895.40. 5. Beginning of the year lease payment to yield a 10% return. So 96,895.40 divided by 4.16986, which is equal to 23,237.09, which is the installment of every year after deduction of interest by 2,000. Ledger accounting for residual value. Lease amortization schedule for ledger. At initial stage, lease receivable $1 lakh. On 1st January 2012, annual lease payment plus residual value 25,237.09, which is included executory cost 2,000 as a interest and lease receivable recovery 23,237.09, and balance is 76,762.91, same as next year installment 25,237.09, interest 2,000, and interest 10% on lease receivable 7676.29. So lease recovery 15,560.80 and balance 61,202.11. तो इस तरह से एट द एंड ऑफ द 5th ईयर ये आपका जीरो हो जाता है. नाउ सेल्स टाइप्स लीजेज और लेजर्स. Primary difference between a direct financing lease and a sales type lease is the manufacturer's or dealer's gross profit or loss. Ledger records the sales price of the assets, the cost of goods sold and related inventory reduction and the lease receivables. Difference in accounting for guaranteed and unguaranteed residual values. Sales type lease illustration. To illustrate a sales type lease with a guaranteed residual value and with an unguaranteed residual value, assume the same fact as the preceding direct financing lease situation. The estimated residual value is 5,000, the present value of which is 3,104.60, and the lease equipment has in rupees 85,000 cost to the dealer. Caterpillar assume that the fair market value of residual value is rupees 3,000 at the end of the lease terms. So computation of lease amount by Caterpillar Financial sales type lease के according, lease receivable $1 lakh, which is equal to 23,237.09 multiply 4.16986 plus 5,000 plus multiply 0.62092 as per the table. Sales price of the assets 1 lakh. Under guaranteed value 96,895.40. So cost of goods sold $85,000, which is equal to 1 lakh minus 3,104.60 equal to 81,895.40. So gross profit equal to 1 lakh minus 85,000, which is equal to 15,000, and 96,895.40 minus 81,895.40 which is equal to $15,000. Other cost of goods sold 85,000, lease receivable 1 lakh, sales revenue 1 lakh, inventory 85,000. Cost of goods sold 81,895.40, lease receivable 1 lakh, sales revenue 96,895.40 and inventory 85,000. One is the guaranteed residual value, another is unguaranteed residual value. To record receipt of the lease payment January 1st 2012, cash 25,237.09, lease receivable 23,237.09 and property tax 2,000. same as cash 25,237.09, lease receivable 23,237.09 and property tax 2,000. So to recognize interest revenue earned during the first year December 31st 2012, interest receivable 7,676.29 to interest revenue 7,676.29. Then interest receivable 7,676.29 to interest revenue 7,676.29. Illustration. Caterpillar makes the following entries. Cash account debit 25,237.09 to interest receivable 7,676.29 to lease receivable 15,560.80 to property tax or expenses 2,000. Unguaranteed residual income cash account debit to interest receivable account 7676.29, lease receivable 15,560.80 to property tax expense 2,000. To recognize interest revenue earned during the second year, interest receivable account debit 6,120.21 to interest revenue 6,120.21. To recognize residual value and lease terms, inventory account debit 3,000, cash account debit 2,000 to lease receivable by rupees 5,000. Bargain purchase options. Leasing. Present value of the minimum lease payment must include the present value of the options. Only difference between the accounting treatment for a bargain purchase option and a guaranteed residual value of identical amount is in the computation of the annual depreciation. Initial direct cost. Accounting for initial direct cost. Operating leases. The ledger should defer initial direct cost. Sales type lease. The ledger expense the initial direct cost and direct financing lease के अंदर the ledger adds initial direct cost to the next investment. Current versus non-current gap does not indicate how to measure the current and non-current amount. For both the annuity due and the ordinary annuity situation, report the reduction of principal for the next period as a current liability and current assets. Now disclosure lease data. For leases, number 1, general descriptions of material leasing arrangement. Number 2, reconciliation between the total of future minimum lease payments at the end of the reporting period and their present value. Number 3, total of future minimum lease payment at the end of reporting period and their present value for periods not later than 1 year, later than 1 year and not later than 5 years, and number 3, later than 5 years. Example of lease arrangement. Example 2. Adams Oven Company. The following is an analysis of the Adams Ovens Company lease. Number 1, transfer of title, no. Bargain purchase options. The $75,000 options at the end of 10 years does not appear to be sufficiently lower than the expected fair value of $80,000 to make it reasonable assured that it will be exercised. However, the $4,000 at the end of 15 years when the fair value is $16,000 does appear to the beginning or to the bargain. From the information given, criterion 2 is therefore met. Note that both the guaranteed and the unguaranteed residual value are assigned 0 values because the ledger does not expect to repossess the leased assets. Economic life test, 75% test. Given that a bargain purchase options exist, the lease term is the initial lease period of 10 years plus a 5-year renewal option since it preceded a bargain purchase option. Even though the lease terms is now considered to be 15 years, this test is still not met because 75% of the economic life of 25 years is 18.75 years. Recovery of the investment test 90%. Fair value $1,20,000. Rate at the rate of 90%. So 90% of fair value $1,08,000. Rental payment $15,000. Present value due for 15 years at the rate of 12%, which is equal to $15,000 multiply 7.62817. Present value of rental payment 114 or $1,14,422.55. So present value of bargain purchase options equal to $4,000 multiply present value of 12% for 15 years, which is equal to $4,000 multiply 0.18270, which is equal to $730.80. So present value of rental payment $1,14,422.55 minus present value of bargain purchase options 730.80. So present value of minimum lease payment equal to $1,15,153.35. Example of lease arrangement. Example 2. Anderson Sobans Company lease equipment over $1,15,153.35 to lease liability $1,15,153.35. Anderson Sobans Company or ledger lease receivables account debit 1,20,000 to equipment account 1,20,000. Example number 3. Mendota Truck Company. The following is an analysis of Mendota Truck Company lease. Number 1, transfer of title no, bargain purchase options no, economic life test 75% test. The lease term is 3 years and the estimated economic life is 7 years. Thus it does not meet the 75% test. So recovery of interest test 90% test, fair value $20,000, rate 90%. So fair value $18,000. Rental payment $5,582.62. Present value of annuity due for 3 years at 12%. Multiply 2.69005. So present value of rental payment equal to $15,017.54. Note adjusted for $0.01 due to rounding. Present value of guaranteed residual value $7,000 multiply present value of 3 years for 12%, which is equal to $7,000 multiply 0.71178, which is equal to $4,982.46. So present value of rental payment $15,017.54 plus present value of guaranteed residual value $4,982.46. Total present value of minimum lease payment equal to $20,000. So the journal entry in the book of Morgan Bakeries or Lazy, leased equipment or truck account debit $20,000 to lease liability account $20,000. And now journal entry in the book of Mendota Truck Company or Ledger, lease receivables account debit $20,000, cost of goods sold account debit $15,000, to trucks account $15,000, to sales revenue account $20,000. Example 4. Appleland Computers. The following is an analysis of the Appleland Computers lease. Transfer of title no, bargain purchase options no, the options to purchase at the end of 3 years at approximate fair value is clearly not a bargain. Economic life test 75% test. The lease term is 3 years and no bargain renewal period exists. Therefore, the 75% test is not met. Recovery of investment test 90% test. Fair value $10,000 multiply 90%, which is equal to $9,000. Rental payment $3,557.25 less executory cost 500, which is equal to $3,057.25. Multiply by 12% for 3 years factors 2.69005. Present value of minimum lease payment using incremental borrowing rate $8,224.16. Now journal entry in the book of Lazy, rent expense account debit to cash account by $3,557.25. And in the book of Ledger, cash account debit to rent revenue account by $3,557.25. Sales leasebacks. The term sales leasebacks describes a transaction in which the owner of the property or seller leasee sell the property to another and simultaneously leases it back from the new owners. Advantage of this one: financing or tax. Self-leaseback, determining assets use. To the extent the seller leasee continue to use the assets after the sale leaseback is really a form of financing. Lessor should not recognize a gain or loss on the transaction. If the seller leasee gives up the right to the use of assets, the transaction is in substance a sale. Gain or loss recognition is appropriate. Lessee, if the lessee meet one of the four criteria for the treatment as a capital lease, the seller leasee should, number one, account for the transaction as a sale and the lease as a capital lease. Number two, defer any profit or loss it experiences from the sale of the assets that are leased back under a capital lease. Number three, amortize profit over the lease terms. Lessee, if none of the capital lease criteria are satisfied, the seller or lessee account for the transaction as a sale and the lease as an operating lease. Lessee defer such profit or loss and amortizes it in proportions to the rental payment over the period when it expects to use the assets. Self-leaseback, lessor, if the lease meet one of the lease capitalization criteria, the purchaser lessor records the transaction as a purchase and a direct financing lease. If the lease does not meet the criteria, the purchaser lessor records the transaction as a purchase and an operating lease. Sale leaseback example, American Airlines on January 1st, 2011 sales and used Boeing 757 having a carrying amount on its book of rupees 75 crore 5 lakhs to city capital of rupees 80 crore. American immediately leases the aircraft back under the following condition. The terms of the lease is 15 years, non-cancelable, and require equal rental payment of 10 lakh 48,000 7,443 at the beginning of each year. The aircraft has a fair value of 80 crores on January 1st, 2012 and an estimated economic life of 15 years. American pays all executory cost. American depreciates similar aircraft that it owned a straight line basis over 15 years. The annual payment assures the lessor a 12% return. American incremental borrowing rate is 12%. Sale leaseback example, this lease is financed to American because the lease term is equal to the estimated life of the aircraft and because the present value of lease payment is equal to the fair value of the aircraft to city capital. City capital should classify this lease as a direct financing lease. And now, do it yourself. What is operating lease? How it is useful to business? And question number 2, what is financial lease? What are its advantages? And that's it from session number 6. Thank you.